we need to move into this awesome case study because I did not know that we were going to have this conversation this year.
Soon.
I thought we would be having this conversation summer of 24, maybe in the fall of 2024, but here we are today talking about the VA IRRRL, which is short for interest rate reduction refinance loan.
Correct.
So the VA IRRRL. Tell us about it really quick for anyone who's first-time watcher or has not heard about the VA IRRRL. Tell us what it is, and then tell us about this case study.
Yeah, it's just simply, veterans, since they serve our country, they have this benefit of utilizing their VA home loan. And when they purchase a property, they put no money down. And they also have no mortgage insurance. And the interest rates is also in their favor because it's a government-backed security loan. And so when a person wants to reduce their interest rate, they utilize what's called the VA IRRRL, as you explained the acronym. And in this case, I'm same with you. It was just rates went down, and they went down as drastic as they did. We saw an opportunity that, hey, this client could save a lot of money right now. And who doesn't want to save money right now, right? If I can save anything, I'll save whatever I can. So in this particular case, we closed this transaction back in 2022 of November, okay? It was a $685,000 loan, and we locked it in at that point in time at 6.625.
Okay. All right.
And as we know, with active servicemen and women, they'll have, if they use their VA eligibility in the past, the VA funding fee is going to be different. In this case, he never used it, so his actual loan amount went up to $709,660.
So he financed the funding fee. Yeah.
Exactly, financed the funding fee. Well, fast forward a year later, right? Here we are. Now we're doing a new loan amount at $715,580. Which includes a VA funding fee of now 0.5%. That's part of, the VA. So that's not a charge a lender does. That's actually something the Department of Veteran Affairs has to charge to the consumer.
That's a good qualifier. That does go to the VA. That is for the VA benefit. So first-time use or subsequent use has a different fee. Correct. It can be lumped into the loan, and it does go to the VA.
Correct. In this case, $715 loan amount, $580. We locked them in at 5.875.
Wow, from 6 and 5/8?
6.625, correct.
Wow.
So I just couldn't believe that. Okay, rates went down. I didn't think I was going to see the fives this year at all.
Well, okay, hold on. Here's what's crazy about this. I'm listening to you. I'm writing my notes over here. This means, okay, so they locked at 6.625 in November 2022. Rates went higher. So it actually went up above, and they crossed it back on the way down just like what, in the last month or
the last couple of
2
weeks?
weeks?
Yeah, last couple of weeks.
Okay, so it was up at, because I know we were also this year in 2023 doing VA loans at 7%.
Of course.
7.25%.
October was again brutal.
October was
7.5.
brutal. Now, but hold on, because we're going to come back to this part. Because for those people, there's going to be a time frame where they're going to pass that threshold where now they can do the VA IRRRL.
Correct.
So I want to talk about that in a second. So for this case, though, they were at 6.625. Rates are doing whatever. Their rates are going to the moon. Then now they passed it back on the way down, and you locked them at 5.875.
Correct.
How much does that save them every single month?
That actually went from their current payment, which was $5,605. $5,605 versus their new payment, which is $5,057.
Oh, shoot.
Yeah. So that's a $548 monthly savings.
Whoa. $548. Okay, so then the question's going to come up, well, yeah, but they already paid, 12 payments. Okay.
Yeah, I mean, we already know the first 12 payments anyways. The first 12 years of, the life of a loan, the majority goes towards interest anyway. So it's like, dang, what could they have paid there, right? So if you're really looking at 709 with the new loan amount of 715, that kind of tells you already.
$548 a month.
$548.
That's crazy because that's not even a full percentage rate difference.
That's correct.
That's 3/4 of an interest rate difference, and so a 3/4% rate difference on this loan amount was $548 a month less.
Yeah. And what's cool about with VA too, there's a recoup period. You cannot refinance somebody if they're not going to recoup their savings within 36 months.
That's right.
That's right. There's that extra layer of protection for the veteran. Like if they're just going to save $100, it's not going to pass.
I'm glad you brought that up because there's actually a couple of things. There's another one I just remembered that their payment has to go, their monthly savings has to be 5% or more than their current payment, right?
Yeah.
So if you're saving less than 5% on the VA IRRRL, you can't even do it. It's not. You can't even come to our office and say, I want an IRRRL and save 4% a month. You can't. The VA will not actually endorse that.
So that's like a layer of protection right there for the consumer. And there's a sheet that you have to go by, which is awesome. So in this case, obviously $548, you'll recuperate because the expenses are not that bad.
Yeah.
You know, and then we strategize it so they're able to keep, skip 2 months payments because they were always paying in arrears, very different than renting. So we set up this whole strategy. So one of the things that we do is, in this case, we're showing our client how to put that money back into themselves and building that equity much faster. So we're telling them, since you've already been used to making this payment, right, of $5,600, we're going to pretend that your payment only changed by $48 a month. So what we do is we encourage them to apply $500 back towards their principal on a monthly basis. When you get your mortgage statement, you have principal, interest, escrow, insurance, and then it asks you in the bottom, would you like to add $500 more towards your principal? So you add the $500. If you do that and continue to do that every month, don't change your lifestyle. Just continue to apply that savings back towards your principal. I gave you the sheet right there, Andy. You can see if they put $500 towards their principal every month, that's an interest savings of $217,000
less
$632 that they would pay for the life of the loan.
Dang. Just by taking that same $500 and just reapplying it towards the balance.
That's it.
In addition to the payment.
Correct. And so if you notice there at the bottom, it says year until payoff. They paid off in 23 years.
Yeah, 7 years sooner.
Yeah, so you mentioned earlier they've already paid 12 months into it. Well, guess what? We're still, if we use the same formula, we still took additional more years off sooner going this route.
Yeah, that's crazy. Well, okay, so going back then full circle, not only is this person paying their house off in this method 7 years sooner, their monthly payment is less. Any month that they maybe need an extra couple $100, they still have it.
They still have it.
They still have that.
They're
savings.
not forced to do that.
But again, this is still at 6.625.
Yeah.
So if someone's at 6.75 or higher, or even at 6.5 right now, honestly, let me do the math real quick. Even at 6.5 or 6.25, this would still work.
Of course.
Basically, as long as your payment is going down by 5% or more, then you can do this.
Yeah.
And that you can recuperate your closing costs in the first 36 months after closing.
Correct.
Now, there's another rule on the timing of this, though. You have to have made 6
No,
payments.
what it is
not 6 payments.
You'd have to wait 210 days.
Yeah, okay. So 210 days from your first payment.
Exactly.
Not your first payment date, everybody. Your first payment. So if you paid it on the 3rd of the month, then count 210 days, and then you're clear to do this. So there's a couple of parameters. 210 days from your first payment.
That's correct.
It has to save you 5% or more. You have to recuperate your cost of refinance in the first 36 months. And this other stuff we're talking about with the home mortgage accelerator calculator is optional. But for people who are disciplined and in a good behavior spending-wise, this is crazy. Yeah. Saving over $200,000 of interest, that's a lot.
Yeah. And you know what's, again, so instead of coming up with your payment at escrow, when you're closing escrow, if you save that money and your payment's $5,600, right? Because you're not going to pay property taxes. Your insurance is already put into your closing costs. Well, that'll be like $10,000 there. So if your loan amount's actually the $715, right? You can just go and save that 2 months that you have right there and apply it back to your principal, and now you're at $705.
Dang, like right away.
Right away. If you wanted to do that, in this case, we didn't do that.
Right.
And then the other great thing about it, let's say normally because when you're active, only your base pay is taxable income. The BAH, BAS is not taxable.
Right.
So I looked at it and put there a 30% tax bracket. Okay. And look what the effective interest rate would be just
4.
because because they're putting that $500 to go towards their principal.
Yeah. Well, and they're most likely, it's most likely even lower than that. I mean, 30% is pretty aggressive for someone who it's only their.
Again, I like to use worst case scenarios.
No. That's what I'm saying. Like even being extra aggressive on the tax rate. I mean, if tax bracket is lower than 30, this is even better for you.
Exactly.
But I think so here's the thing, that effective interest rate is never used by people who want to just make money off of you. And the reason is because that's not a rate you can lock, but you've effectively done that by adding this money every month and paying off your loan early. The amount of total interest you paid over that duration would have meant that your effective rate was only 4.1%, even though your locked rate was 5.875, you said?
5.875.
Wow.
And what's cool about it, what people don't know also is, remember, your property taxes, your interest that you're paying is still a tax write-off. So this is not even aside from that.
Yeah, no, you're right.
It's just
You're right.
savings here, savings there. So it's like once you understand the true formula, that's where it's got to make sense. And you got to educate the homeowner with this.
I'm all excited because for a lot of this year, we have not been talking about things like this. And so I know we were talking about these in 2020 and 2021 and a little bit in the first part of 2022. This is awesome to have this example back, this case study, talking about the VA IRRRL once again. Also, there is an FHA equivalent called the FHA Streamline Loan, and it has a couple of different parameters than the VA one does, but the same kind of rule applies. If you're going to be saving money every single month, the FHA has set it up so that when the interest rates come in your favor and they are dropping well below where you're at now, you can do what's called the streamline refinance and achieve some savings. And then if you want to, apply it to the mortgage accelerator calculator and still have the same outcome of paying off.
And you know, the great benefit with these two programs is there's no appraisal required.
Yeah.
So
that's right. No appraisal. You have to have made your payments on time, right?
That's it.
No late payments and no appraisal. That's right.
Yeah,
because it's not about the value of the home. It's about you're saving the money. So duh.
This is for the betterment for the consumer. Is what it is.
Yeah. That's awesome. So if you have questions about this, of course, you can DM us, make a comment. We'll write you back about your own personal VA IRRRL or your FHA Streamline if you need that. Thank you for bringing that example. That's a really strong one.
No, and again, for our audience out there, if you're doing a loan in another state or whatever, and you have your loan officer, look into the mortgage accelerator. Make sure, or if you need that, let us know. We'll be more than happy to run a scenario with you, and
that's good. So that's real good.